This video was made free of YouTube advertisements by Tara Hutton. Today on the CEO Barbecue, we're looking at a cleanup operation in the southern end of Vancouver Island, together with Sasquatch Resources.
For a bullet point summary of this and all other CEO interviews, please go to resourcetalks.com and subscribe to our free weekly newsletter. The company you're about to hear from has not paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record, because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Sasquatch essentially looks to acquire historic non-operational mines with waste piles in hopes to get permits to then clean them up while recovering whatever metals are left in those piles. Their flagship project, the one they're working on right now, and the focus of this conversation is the Mount Sicker property, which again, it's on Vancouver Island, about an hour away from Victoria. And it's got a mining history going back to 1895 when it started producing. It was a polymetallic mine at the time, so it produced gold, silver, copper, and zinc. After the company that operated it went away, though, it left behind 300,000 tons of sulfide-bearing waste rock. And Sask's thesis is that those waste piles contain economically recoverable polymetallic, again, mineralization, which they want to recover by using sensor-based ore sorting to separate the high-grade fraction, which would then be trucked to the port and then shipped to a processor, as far as I understand it. As you can imagine, though, that raises quite a few questions on my end with regards to cost, efficiencies, permitting, and more, hopefully all of which I'll get to ask later on in the conversation. That's not the only project. There's other assets that they have in their portfolio, two more of those in similar situations close to this one, so still on Vancouver Island, as well as two others, so 5 projects total. Again, Mount Sicker is going to be the focus of the conversation, but maybe I can get an update on the other ones later on as well. Now, for some of the numbers and more details, Sasquatch is listed as, again, Sask, so that's SASQ on the CSE, where the average 3-month volume is about 72,000 units. The stock's 52-week high is 20 cents, and its 52-week low is 3.5 cents. With just a little under 38 million shares outstanding and a $6.6 million market cap today, this is a 17.5 cent stock with a 50 and a 200-day moving averages at respectively 12.8 and 7.5. Share structure, G&A, cash in hand, and other fun finance stuff we'll have to wait for in the latter part of the video. But I'll be asking about them, especially given that they just did a small financing, about $500,000. So I'm curious as to how far that's going to get them. Is it enough money to pay for G&A, keep growing the company during a bull market, paying the option, and so on and so forth? Those are all going to be part of the questions later on in the conversation. Now, for this to become a conversation, though, I'm going to have to shut up already. And Pete, I'll give you the word here. But first of all, thank you for sitting down with me today.
Thanks for having me, Antonio. I'm very excited to be on the show.
Well, I'm looking forward to going over the basics here in a minute, because it's an interesting story, one that I haven't come across all too often, if any. But just before we get into all of it, the most fundamental barbecue question here: how do you like your steak?
Medium rare. I think there's no other way to have it. I'm an aristocrat, so
That is the only right answer. Believe me, I have had different answers over time. Where are you from originally? Because I think you live in Victoria, like on Vancouver Island. Where are you from originally?
Yeah, born in Moose Jaw, Saskatchewan. I'm a base brat. My father was a pilot in the Air Force, and so you name an air base in Canada, and I've lived there. Gander, Newfoundland, Portage la Prairie, Trenton, Ontario, but just happened to kind of end up on the West Coast when I got to college age. And so I've been here pretty much ever since. I practiced law in New York City for a while, and I worked in Australia as a social science researcher. But, the early days when I was trying to figure out what I wanted to do.
Do you ever miss the Saskatoon weather in winter?
Absolutely not. Although, one thing anyone on the West Coast will tell you, we miss the sun. So even though it doesn't get very cold here, the one nice thing about winters in Saskatchewan is that the sun comes out and you get a little bit of vitamin D. And we don't get that so much here in Victoria and Vancouver. We don't see the sun for about 4 months, and I think we go a little stir crazy by now. Actually, this is the time of year where it starts to come out, and we're pretty desperate for it.
Just when it starts getting unbearable, really.
Yeah,
And you don't have to tell me. I live in Belgium, so I think we get less sunny days than even you guys do on average per year. So,
gotcha.
jokes aside, though, Steve, or Pete, I'm looking forward to better understanding how you operate. But it might be a better idea, maybe, to first understand what you're really doing here, what you're looking to build, because again, I walked through the cleanup strategy early on, but is that the goal for you? Like, do you want to just build a cash flowing producer and kind of keep growing it from there? Could this be a
Yeah,
takeover target, or where's this thing really going?
that's, the story. It is interesting. I mean, we started like any other junior mining group. We loved Mount Sicker as a potential reopening of a legacy mine site. We looked at the historical records. We saw that there was a historical resource there that hadn't been fully mined, and they stopped back in 1915 for whatever reason, macroeconomics, the war, who knows. And so there was some ore left behind in the mountain, and we started looking at it from that perspective. Not unusual. But the thing that kept kind of hitting us was these waste piles as we went up there to take samples and do our research. Of course, you can't help but notice these massive piles of waste rock. And we were sampling those along with a bunch of other things, and noticed that we were getting higher than expected grades from the waste rock. And so this prompted us to start looking into the history a little more closely. And what we discovered was that their cutoff grades, this big mining camp was really in full swing kind of from 1895 to about 1915. And certainly in the early years of the mining up there, their cutoff grades were 8% copper, if you can believe that. So everything they're taking out of the mountain, they're doing a quick evaluation, and if it's not 8% copper or better, they are tossing it onto a stockpile or a waste pile. So now, our blood is up a little bit, and we're thinking, okay, well, wait a minute, there could be some real value in this waste rock. And then the real clincher for us is as we started looking more closely, we realized that there was a serious and negative environmental impact, ongoing impact from these waste piles. They're leaching acid and contaminants into the environment to this day. And really, the seeing the site is what hammers it home. Mount Sicker it's a beautiful wilderness. It's 10 minutes from Duncan, which is a pretty big town, kind of mid-island. People are up there mountain biking. It's a recreational area, and you've got this one legacy mine site. It's maybe 5 football fields in size that is wasteland, surrounded by beautiful, pristine wilderness. You've got wasteland, and it's been there for 120 years. This area where there is no growth, and it's become a popular place for the community to dump garbage, and it's truly just this massive eyesore. And as I said, doing environmental damage on an ongoing basis. And so we ended up putting two and two together. Like, if there's value in this waste rock, and if we can pull the sulfides out and reclaim this site, then we can make some money, but also we can make a change for the better in the community.
I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terrahutton.io.
That's again, an interesting strategy, which I want to discuss. Is it the goal for you long term, though, or do you just want to clean up this one specific site, or is there a business strategy to be had?
Yeah, great question. So immediately as we're going looking at this as a potential model, we of course are thinking about pipeline because and this is good news. We can get through these waste piles quickly. It's a simple process, essentially a mobile and closed loop process where you're doing crushing and ore sorting, uh, not creating any new waste at all, and taking the high sulfides out of these piles and taking them to port and selling them. So, given the kind of simplicity of this, you're also going at a pretty high rate of speed. So we'll get through this whole waste pile in a year once we start operations. So then what's next? Well, it turns out that there's 2,000, estimated to be 2,000 legacy mine sites in BC alone, hundreds on Vancouver Island, probably tens of thousands in Canada. And, worldwide, I'm sure the number just multiplies. So we started looking for pipeline projects, and lo and behold, 30 kilometers up the road, similar situation, a mine called Bluegrass, which was in operation 100 years ago, created a big waste pile. They stopped operations in 1920, again, for whatever reason, and dropped their shovels and left. And of course, you got to remember back then there weren't really any regulations surrounding mine closure or reclamation. So these 100-year-old legacy mine sites have been left in a sorry state. Uh, and there are dangers, open mine shafts, etc. But there's also potentially, and I think in many cases, going to be great value in the waste rock that's there. So we found bluegrass. We found another one an hour up the road called Santana, and we found one which we've actually just acquired near Port Alberni, the Alberni claims. So we're not having any trouble finding these legacy mine sites and these waste rock piles. Really, it's just going to be a matter of evaluating each one, trying to figure out if there's some economic potential, which is going to include considerations of is it close to port and how accessible are the piles, and so on.
Yeah. Well, you're opening up an interesting topic there, which I will touch upon later on. But since it is your first time on the barbecue, we're going to have to take a step back and go through what I call the smell test, which is really aimed at understanding the incentives and the track record of management. And I want to start off with yourself and your track record. Who are you, and have you made more money for shareholders in your career than what you've spent so far?
Sure, yeah. Well, I certainly think that I have. I started my career off as a lawyer. I went to UBC Law School and Cambridge before that, and ended up clerking at the Supreme Court of Canada, and was recruited by a great law firm called Debevoise and Plimpton in New York. So I kind of paid my dues, so to speak, there. It's a wonderful law firm, but very hardworking group of guys, and so I was in the meat grinder, so to speak, for a year and a half. And then my wife demanded that we not live in New York anymore so she could see me every now and again. So we moved back to Vancouver, and I've been in the pubco space ever since. One of my early success stories was a company called Less Mess Storage. So this was back in 2012, 2013. We started one of the first storage businesses in Poland. Started with a couple of stores in Warsaw and three stores actually in Prague, in Czechia. And that business has now grown. We have over 20 stores, mostly in Poland. Massive success story, founded by myself and a Cambridge friend of mine named Guy Pinsent. And now the business is valued well over $500 million or so. That was kind of my first big success story. And shortly after that, started a company called Myriad Uranium with a law school friend of mine named Thomas Lamb. You may have had him on your show in the past, but Myriad has been, I think, a pretty big success story as well. We started with a small land package, essentially in Wyoming, known as Copper Mountain, and over the last 3 years or so, it has grown exponentially. I think the market cap is now well over 60 million.
Mm-hmm. Do you still have to run any of these companies, or do you have any other executive or board positions?
My friend Tom Lamb has taken over the CEO role at Myriad, and he's doing a wonderful job. I'm still peripherally involved, of course, I know the property very well because I was there in the very beginning. But he takes on the bulk of the work at this point. I'm very focused on Sasquatch because this project is near and dear to me for a number of reasons, not the least of which is that it's in my backyard. I live in Victoria. It's about an hour away from my house. And I may be jumping ahead here, but I'll just mention it right now. I definitely want to communicate that a big part of my motivation here is to make a meaningful difference on Vancouver Island and maybe beyond from an environmental perspective. I love the idea of being able to say to my kids and my friends, uh, look what we did at Mount Sicker. We took a wasteland and we've turned it into a parkland. And we've created a formula which I think is highly repeatable. So, who knows? This could be a very big step in terms of legacy mine sites everywhere, making them safe and also making them environmentally safe.
Mm-hmm. And that is something that I do want to talk about when it comes down to permitting, and we will. But we're really where I was going with this when I ask you if you have any other executive or board positions is thinking about how do you split your time, how much of your time actually goes towards Sask.
Uh, 75% of my time is dedicated to Sasquatch right now. I do have a couple of other things that I'm spending time with, and in particular, Myriad and another company called Rush Rare Metals. But I dedicate a good portion of my time, if not most of my time, to Sasquatch these days. Um, Partially because Sasquatch is just inherently much more busy right now. We've got a lot going on. We're in permitting. We've got a lot to evaluate in terms of pipeline projects, and so the demands of Sasquatch are also very high.
Hmm. Well, that's also where I'm coming from is trying to figure out exactly given how much time and effort has to go into this to get it permitting, how much of your time goes into it. But you're not alone. I mean, you do have a team. What kind of a team do you even need for an operation like this? Like if this was an Explorco, I'd know what to ask you about. And I mean, everybody always says they have the right team for everything, but do you have proof? I mean, has your team had success at something like this before? And really what I'm looking for here is specific experience for the specific task at hand.
Yeah, we have an amazing team. I'll run through it if you don't mind. But Thomas Lamb is a director. So he and I started Myriad Uranium together. He's really a part of our kind of financial and fundraising arm, and that's something that he's absolutely extraordinary at, and we're very lucky to have him helping us on those fronts. Recently, we've been joined by Andy Holloway. He's now on the board. So Andy is a engineer metallurgist with an outstanding 30-year career as such. And this is a guy who has worked with the likes of Glencore and Ocean Partners. He is going to have amazing contacts and information in terms of end sale. When it comes time for us to sell the high grade product that we're extracting from these waste piles, he's going to be the man that, first of all, finds us the end buyer, but also delivers the product. It does the metallurgy analysis and figures out exactly what the value is of this high grade product that we're bringing down to port. So Andy's critical, but he absolutely knows what he's doing, and we're very lucky to have him. I'll mention someone who's not so famous. in terms of having one of these massive careers, but it is just an amazing asset to us, and that's Justin DeVoe, lifetime prospector. Some people would know him. He was a former paramedic, and so he has a company called not he calls it 911 Mining. As a paramedic, that's the number you call when you need help. But he's left that profession and is now full-time prospector, and he is a wonderful prospector. He does his homework. He does lots of research online. He's a boots on the ground guy, and he knows Mount Sicker. He lives actually at the base of Mount Sicker in Duncan. He knows Mount Sicker like the back of his hand, and I joke to people, but I'm not really joking. He's named rocks on this mountain. I mean, as we're walking around, he'll point at a rock that's got 28% copper, and he'll say, yeah, that one's got 28%. That one over there's got 14%. He just knows the mountains so well, so invaluable to us. And just kind of rounding out, we have Lou Webster, who's been practicing law in Victoria for 30 years, and as a result, he knows kind of everybody in the legal community here, and he's got great contacts from First Nations to people on council, etc. So the whole team is really well rounded, and I think we are absolutely well positioned for a project exactly like this one.
Track record is one thing, and I do want to touch upon what you said there about Justin. We will. Another thing, though, is incentive, and I believe skin in the game is the largest one of the available incentives to us in the mining space. I don't see a capital structure breakdown on your presentation, which I would like to see typically. So what is it? I mean, who owns what? What percentage of that is management? Talk to me about ownership.
Yeah, sure. And forgive me, we do have to kind of get those details out there. And I'll just highlight, Sasquatch has kind of had its head down collectively, and we've been just working on de-risking this process and these pipeline projects. We have not been doing very much marketing. So just in the last couple of weeks, this is our first foray into marketing, so to speak. So we're getting there, we're getting caught up, but up till now, we really have just had our heads down. We've just been working on this project, and as I said, de-risking it, because I wouldn't feel comfortable marketing something that wasn't adequately de-risked, if that makes sense.
Mm-hmm.
Having said that, I own about 10% of this. Tom Lamb owns 10%, or it might even be a little more. Justin is close to 10%. Most of the people that are involved in this, i.e. insiders, have high percentages of share ownership, and that's why we're here. I don't get paid very much for spending time at Sasquatch. I make $5,000 Canadian per month, and that hasn't gone up. It's been that way for the last 2 to 3 years. I'm in this for the equity. And I want people to understand that, and as is everybody. We run this project lean and mean. Andy Holloway is obviously a professional that can demand massive wages and hourlies and contracts, etc. Andy is involved in this because he used to live in Nanaimo, not far from Mount Sicker, and really believes in what we're doing. Not only the economic potential, but he loves the environmental side of what we're doing too.
How did you guys get the shares? So you own about 10% of the company. You said Tom does as well. Was that bought and paid for, or what would the average cost be of those shares?
Yeah, bought and paid for every share. We did the allowable construction shares, I believe at 2 cents. We're going back 3.5 years when we first listed Sasquatch, and I've participated in every round of financing since to maintain myself at that level. So I've personally, now again, keep in mind Sasquatch runs very lean and mean, and we haven't spent much money overall, but I'm probably $400,000 in or so, and I think we've only raised a total of maybe 2 million altogether since our inception.
Right. So you're 400 in, got about 10%, and market cap's about 6 now. So your average cost is what, 30% lower than
My
what it is
average
right now,
cost
something like
in
that.
is probably going to be in the neighborhood of 6 or 7. And forgive me, I haven't done an
Yeah.
actual calculation, but there's the initial construction shares at 2 cents. We did a 10 cent IPO. We did a 5 cent placement going back a year. We've recently did another 10 cent round. Again, I participated in every round, and I'll just highlight that we've been running completely under the radar and with zero marketing up until now. This is finally the time when we feel like it's time to get it out there, so to
Mhm.
speak. So up until now, it's been insiders financing this almost exclusively.
Yeah. Well, so here's what I'm really looking for here. Where that question comes from, Pete, is a cheap paper. So I'm looking for within or outside of what management owns, either with how the company got to be or anything like that. Does somebody, maybe the person who put the shell together or however this came to be, does somebody own any kind of like half a penny stock essentially?
No, no. I believe the cheapest shares that we've printed are 2 cents. Of course, you can always go back and look at the original IPO filing and get the answers. But uh, certainly over the last few years, we're not giving stock for sweat equity, for example.
Mm-hmm.
This company is the vast majority of shareholders have paid for every single share, and I'm trying to think of an example where that's not the case, and I can't. So.
Hmm. Yeah. Yeah, good. That is the right answer. That is what I'm looking for here, essentially. What's the warrants, an option situation, warrants outstanding, options outstanding, and like if you have pricing on that for me, that would help as well.
Yeah, there's between 15 and 20 million options and warrants outstanding. The options and warrants, I would say, kind of average out in the 8 to 9 cent range. So there is a bit of overhang there if you look at the current price. But I will just highlight that uh, again, I'm trying to think of an example where it's not an insider, but these are mostly insiders. This is our kind of close group that has been building this and de-risking it from the very beginning. So um, uh, one of the big warrant holders is yours truly, option holder as well. We had a couple of really interesting guys from some larger funds come in for some of the more recent placements, and I won't name them, but these are guys that I worked with on less mess. So that's just one of the benefits of building a big storage company that grows in value to a $500 million is you have a couple of guys built in that just say I'll support you in your next endeavor. And so we do have a couple of guys that have been coming along with every financing along that vein.
Well, talking about insiders, do you or any of the other insiders personally own a royalty on any of the projects you have?
Yes, Justin DeVoe. So the wonderful prospector that I was talking about a short while ago. He is the guy who went out and found all of these properties, and so we acquire them from Justin, and Justin generally gets an NSR, but it's usually a friendly NSR, and obviously you can go and look at each deal, but 2% with the ability to buy back 1%, and again, Justin is in this. I think like the rest of us, he just wants to see success, and so. I'm sure he's going to be highly reasonable when it comes time to crunching the numbers if we need to do that.
Because he's also the person who originally optioned your flagship asset. Now, again, as you mentioned, he prospected and found it, which could be a conflict of interest, right? Because he could have more interest in the company paying more for that property, or buying back the royalty, or in the option not even lapsing in the first place, as opposed to worrying about the stock price, right? Like, which if I bought the stock today, that's how I would look to make money on it. So talk to me a little bit more about that, how that potential conflict of interest is managed, and yeah, what exactly goes on there.
Yeah, no, it's a really good question, and I'm glad you're kind of going here because this is my wheelhouse. So we are very careful on the managing the kind of legal fronts and potential conflicts. When we started focusing on waste rock reclamation as a strategy, going back probably 2 years now, um, up until then we really were just kind of a junior exploration company looking to open a new mine. And so Justin had his stuff going on the side, and as a board, we were happy to let him go and develop his own assets. And by the way, he was always very good, and he let us know what he was doing, and always gave us first crack at acquiring anything that he was looking to potentially JV or sell. So we certainly went through that process. But I will say, happily, when we decided we were going to go after the reclamation approach, for us it was kind of very exciting because it gave us the opportunity then to go and look at all of Justin's holdings with a fresh set of eyes, if that makes sense. So the company kind of turned its attention back to Justin's prospecting. And by the way, I'll remind you, he's been prospecting for a decade. So a lot of the properties that he's got, he's held long before we ever decided to go on this Mount Sicker venture together. So we reevaluated all of his properties, and ultimately, as you can see in our news releases, we ended up acquiring a bunch of them, recognizing that they were actually really good waste rock opportunities at the end of the day.
Mm-hmm. Yeah. So when it comes down to negotiating the option or negotiating other stuff, negotiating the buyback of the royalty, how does that, like, is he excluded? Because he's on the board, right? And so he would typically get insights into how you think about the value of that property that an otherwise an option or otherwise wouldn't. So how do you deal with that?
Yeah, he doesn't vote on those types of things. He's obviously he needs to abstain, and so the rest of the board looks at opportunities that Justin may have, and we look at them objectively at the end of the day. And when we are trying to decide what we're going to pay Justin, and I will say this, I don't want to throw poor Justin under the bus, but he gives us great terms. He just does, erring, I suppose, on the side of caution, but I think he's excited about Sasquatch in the same way that Andy is. I think he just loves the idea of going out there and potentially making a positive difference for the community. Of course, we all want to make money, but at the end of the day, I think the reclamation approach has kind of really got the whole team excited. And so when we're dealing with Justin to acquire these properties, we're not running into hard-nosed negotiations necessarily. He just says, "Look, you got to make me an offer, guys," and we get together as a board without him, and we figure it out, and we do, and it's been very friendly.
I do want to talk about that business opportunity that you're talking about here, essentially, and go through your business plan. But it might even be worth taking a step back before that, because what you told me, or what you're telling me that you're trying to do here, doesn't sound too complicated or like too complicated of a strategy. So much so that even I could get it. So it probably isn't that complicated. But and you probably aren't the first one who's thought of doing it, I would think. So talk to me about the history of
so
business as a whole, and like, more importantly, really, I'm sorry for continuing on, but more importantly, how come nobody's beat you to it?
That is a great question. I've had that question before, and you're right. When the penny drops on the reclamation stuff, you just go, wait a minute, this is just too easy or too simple. And I think there's been two big issues in the past that have stopped the momentum of waste rock reclamation as essentially as a business. First of all, and I ran into this early days with a lot of the engineers that we talked to before we actually had Andy join the team. There seems to be a temptation to over process waste. So what we're doing again is might be counterintuitive, but we're doing kind of less to get more. All we do with the waste is we crush it and we sort it. And because we can do this in a closed loop, and we're essentially just pulling sulfides off and transporting them down the mountain and to port, we don't need to create new waste. Now, we may be sacrificing grade because, just going back to the kind of early engineers, they always said, hey, you should add flotation to this process because you're going to have way less material. It's going to be cheaper to take it down the mountain, and the grades are going to go way up. Well, that may be true, but the problem when you add flotation is any extra steps, frankly, is now you've gotten to a stage where you're going to be creating waste. And as soon as you create new waste, first of all, you're kind of going against what you're trying to accomplish in the first place, which is remove waste. But second of all, and this is BC, but I bet you it's similar in most jurisdictions, to create a new waste area, designated waste area, is a 5-year permitting process and an expensive one. So as soon as again, I think the intuition for most is to try and process as much as you can on the hill. But that has been, I think, a folly approach at the end of the day because it makes the whole thing non-economic at the end of the day. And the other thing I think that has happened is people, especially in mining, of course, are quick to dismiss due to the volumes. So, of course, most junior miners are out there, they're looking for a 10, 20-year mine. They want to be looking at millions of tons of mineable material. And of course, that is the way it works. And you look at a waste rock pile and it's 300,000 tons. And I think it's very easy to say, well, it's just too small. Why would we spend time and resources developing something like that? But I think what people have failed to recognize, and this has been somewhat made more obvious by the recent run in metal prices, of course, but 300,000 tons of waste, if you're getting 2 to 4 grams per ton of gold and 2 to 4% copper, if you're getting those grades throughout the entire pile, it's not hard to kind of go to the back of the napkin and realize that, that this is 200, 300 million US of metal value in this pile. So I think that those two things, I think the tendency to want to over process and the tendency to dismiss the waste piles as maybe just not being worth it in terms of overall economics. I think those two things have staggered the development of waste rock reclamation generally. So not I'm not saying we're the first to come up with this idea. I think we're the first to follow it through to this stage and to stay kind of laser focused on it. And we've been very happy kind of with the result. The other thing that I would do want to mention is we're linking these permits for reclamation to making the sites safe and closing these legacy mine sites. And so that's an important factor to keep in mind. And so there is an extra cost there, but that's also, I think, going to lead to a more successful and streamlined permitting process for us. So we're not just applying to process a bunch of waste and walk away. Our permit application for Mount Sicker, for example, we're saying, hey, we want access to this waste, but we are going to re-landscape and beautify the site, and we're going to make it safe. We're going to make sure that these open mine shafts are addressed.
What do you have to be public for, though, then in that case? That's what it makes me think, because no, the market typically doesn't appreciate smaller volumes of operations in whatever sort. I mean, the market kind of thinks in two ways. It's either grade or it's size. So why not take this private?
Sure, I suppose that's something we could consider. It's interesting. Once we get this permit, assuming we do, and we're in permitting now, I'm sure we'll get to that. It's one of those. It's going to be one of those watershed moments where I think the whole board has to step back and evaluate. Should we be, as you even just suggested, should we be taking this private? Should we be using debt instead of equity to finance our hardware? There's a lot of big questions that we're going to have to address very, very quickly. And then on the flip side, maybe the market responds very positively to the granting of a permit and sees that this pipeline is going to be robust enough to support a big valuation. Only time will tell, but we'll make, I think, the right call as a group when we have to make it.
Right. That's always fascinating to me. I think in general there are too many public companies to begin with, and so it's always fascinating to me how that process goes. I think yeah, as we do talk about permitting and money and everything else, that might become um, clearer, and we might. This might be a good point to start looking forward. Essentially, trying to better understand three things, at least for me, and that's time, money, and risk. Starting off with the first one, how long do you think it could take it take you to be in production from this point on? Again, permitting, you said if you want to permit uh, a tailings dam or something like that in BC, I mean, we're talking a decade, maybe if you count in the First
Yeah.
Nation. So yeah, what is that for you? How long is it going to take you?
So this is one of the big risk factors, by the way, is permitting, and we're in permitting right now, and I will tell you the people that we're dealing with have been great. They were trailblazing, and they've recognized that, and I think the province of British Columbia recognizes that legacy mine sites are an issue for them. There's all kinds of liabilities, physical hazards, but also environmental liabilities. So the province would love to see junior mining companies rush in and start taking on some of these liabilities. So that's what gives me a lot of hope that this permitting process is going to go well. Having said that, right now there's essentially two extremes. You can apply for a new mining permit, which is a massive endeavor. It takes years and it's very expensive. And then you can apply for a drill permit and a bulk sampling permit, and that's a pretty simple process. We're in the middle in a way. We're not doing any new mining. We're not creating new mining infrastructure, no new waste. So that's good news. But we're dealing with volumes way beyond what you would be asking to deal with in a bulk sampling scenario, for example. So so we are kind of doing a little bit of new trend setting here with the permitters, and we're mutually just trying to figure out what's the best way to go forward here. And they've been actually great. They've asked us for engineering reports and reclamation plans, a number of things, and we've been providing it. And I think they've been very reasonable with us. The reason I say it's a risk factor is because we just don't know exactly, even mutually, we don't know when we're going to get to that tipping point where, okay, we've got enough information, we can grant the permit. But I speculate that we're getting close. Of course, I would, being the CEO, but I do think it's going well, and I think we've tackled a lot of the big unknowns in terms of the environmental issues that we may have up there. So having said all that, to directly answer your question, our plan right now is to start operations in the spring of 2027.
Oh, that's exactly where I was going with this. Kind of like maybe even a rough estimate. Is it a 1 to 3 year thing, 3 to 5, 5 to 10 year type of thing? That is an aggressive timeline. I suppose you would have to come up with an NI 43-101 and then maybe a PEA or some sort of document, depending on how you want to finance this. What's the timeline over the short run or before you actually get into production? What are the required deliverables between now and that potential production date in 2027?
So this is where we get into gray area. You mentioned 43101 and PEA. In our case, it's probable that we will not ever produce those. Essentially, we're dealing with what we feel is a very predictable pile of waste. We've sampled it extensively on surface. We've even drilled into it hand augered holes. We've done 30 holes 2 meters deep in different places. We're pretty satisfied based on what we've done that we're going to get a fairly predictable grade throughout the pile. It's also going to be a risk factor, of course, because at the end of the day, you never know. But we're not just basing it on our sampling, which by the way would not be enough for a 43101. We're also basing it on mining records. I mean, there are some pretty good, even though albeit old, mining records that discuss in great detail the metallurgy and what they were pulling out of the mountain, what they were rejecting and piling, etc. So we've managed to cross-reference lots of data to the point where really comfortable with the composition of the pile. And one thing I'll add is that the ore sorter is kind of the great equalizer at the end of the day. So we're going to have high grade sections of the pile and low grade sections of the pile, but the actual sorting mechanism is going to, the only thing that's going to change a whole lot is going to be the mass pull, meaning the amount of volume that you need to create 10,000 tons of high grade result. In some cases, it's only going to take 20,000 tons to get there. In other cases, it might take 80,000 tons. So that's what I mean when I say the sorter ends up being the great equalizer. We're going to end up with a pretty uniform final product for sale. It's just the volume required to get there that's going to change throughout the pile.
That's actually where I came from with that question or assumption that you would have to make one because this was a VMS, right? When it operated as a volcanogenic massive sulfide deposit.
Yeah, that's right.
I wonder how waste piles were dealt with back in the day because it was not like when you go to mine site right now, waste piles are structured and sorted in a very proper way, and you have very decent documentation, even if it's 100 years from now. I wonder how that happened back in the day and how predictable the operation is going to be because you can be scooping up something today and then it changes tomorrow, but then it goes back to the other thing the day after and so on. So how predictable is it, or how are you going to figure out if it's predictable?
It's predictable with a big caveat. There's three different companies. Again, a little bit of a history revisit here, but there was actually three different companies on Mount Sicker operating adjacent to each other, if you can believe that. So you had Tyee, Lenora, and Richard III, three mines owned by three different companies, all operating at the same time, probably throwing rocks at each other. And because they clearly didn't get along. And the reason I say that is because they were using different methods of transporting the ore
Hmm.
off the mountain. So they were not cooperating, it seemed, in any way, shape, or form. One group was using rail, another group was using a tram, and another group was just kind of carting stuff off the mountain. So they were all kind of running their own operations. So as a result, there's essentially three waste piles, and they're all very close together. But there's the Richard III pile, the Lenora pile, and the Tyee pile. So we've of course been testing all the piles and augering into all the piles. And again, like what we've been getting has been a pretty predictable and uniform result. So at the end of the day, the material that they were pulling out of Mount Sicker, I think, was pretty predictable, which has made the waste product pretty predictable as well.
Mm-hmm. Per pile.
Yes, yeah, each of the piles seems to have a lot in common at the end of the day. And again, keep in mind and I'll qualify this quickly just by saying I'm a lawyer and not a technician. So if you want to trip me up on the actual details of the process, it won't be particularly difficult. But my understanding is the ore sorting equipment can be adjusted kind of midstream. If you start seeing a slightly different material, optimizing the settings is not something that's particularly challenging.
Hmm. Well, I make YouTube videos for a living, so I'm not a geo nor a metallurgist. You could lie to me and I wouldn't know. Um, but the final result, though, would it be? Does it go to the same spot? Like, because I wonder, like, metallurgically, who are the available potential buyers from here on out? I understand you don't have offtake agreements right now, but have you already spoken to someone who's kind of given you, maybe only verbally and informally, is just kind of giving you a green light, saying like, yeah, we could take, like, if you mix the three piles, we could still take it, mill it, and then send it to a smelter. Have you spoken to someone in that
Sure,
regard?
yeah, we've had preliminary discussions with everything from ore brokers to and processors, and it's all been early days discussion, as I'm sure you can appreciate, because pre-permit it's tough to take too much of their time. They're not going to be taking us all that seriously until we get past the permitting stage. But having said that, again, Andy being the expert that he is and having the relationships that he has, He's had discussions with people that he's worked with before, i.e. buyers. And there is a lot of interest. We still have, and I'll highlight, we still have some metallurgical work to do here. If we just hand over a kind of a high grade concentrate that's got zinc and copper to somebody, they're going to penalize us to death, because I understand that's part of the business model. They'll just say, "Oh, there's too much zinc," and so what we want to do ideally is we want to give them the concentrate and a roadmap. Say, look, we've run flotation on this 6 different ways, and these are the best results that we've been getting. That way, we're going to, at the end of the day, ensure that we get the best price we can.
Right. Yeah. You said you've done some metallurgy. How's the mix from a nasty perspective? Arsenic, bismuth, mercury, anything else like that?
The metallurgy work is kind of starting, and so that's going to be something we'll provide updates on. However, we did do a test run, and we put a press release out about this. We ran a half a ton through the crushing and the sorting process, and results were great. Over 95% of all the sulfides actually were successfully removed, which is amazing. So when I say all the sulfides, I am talking about the gold, copper, silver, and zinc, but also the arsenic, lead, and sulfur. So the ore sorting was highly, highly effective, which is great news. The other interesting thing was we did acid testing, because we wanted to make sure that what we're leaving behind is no longer acid generating. So interesting results there. We found that, first of all, the waste that's there now is acid generating. So that wasn't exactly a revelation, but just confirmation that even after 120 years, these piles can still be environmentally damaging. But the rejects, so when I say rejects, the stuff that we ran through the sorter that wasn't selected as high grade, we did acid testing on it, and it was non-acid generating. So essentially benign rock. So we couldn't have hoped for better with this kind of early test.
You bring up a good point because, and that's something that I recently saw. I went to visit the old Britannia mine in BC, just about an hour away from Vancouver, not too long ago, about a month and a half ago, and they still have to treat their water. It's a museum now, so they walk you through the whole thing. It's actually great, but they still have to treat their groundwater and everything, and are going to have to forever. So that makes me think about exactly what you're doing. So mechanically disturbing the waste pile is just naturally going to increase the sulfite surface area exposure, right? Which would it would naturally accelerate that acid generation and metal leach. And those two things right there are what regulators kind of love, hanging hats on if you wanted to. So what did you come up with? I mean, what kind of, because I looked at some of the results that he came up with. Typically a result of 1. I think you came up with 0.2, which still kind of points toward it being acid generating, but you said no. So what's that situation there?
You kind of hit the nail on the head. I mean, this is the big risk. If we've been selling this concept of addressing waste and removing the sulfides, and of course, as any lay person who hears that pitch says, "God, why not? That's perfect." The thing that the permitters are going to be most concerned about is exactly what you just brought up. During this process, are you going to make matters worse environmentally? Of course, accidentally, but regardless of whether it's by accident, if you're going to make the environment worse, that's a terrible result. So obviously, there's a bunch of things that we need to do to ensure that doesn't happen. One of them, fortunately, is that I mentioned earlier, we can get through the entire pile in a relatively short period of time. Mount Sicker essentially has a wet season and a dry season. So in the winter, there's a little bit of snow buildup. It rains a lot. There's significant runoff. Starting in April, next month, things really do dry out up there. And by May, there's literally no runoff whatsoever. The water disappears and doesn't return again until the fall. So one of the things that we're going to be concentrating on is timing. We, so I mentioned earlier we'd like to start 2027 in the spring, and that's not by accident. We're starting with the dry season, and hopefully getting through the entire pile before the wet season returns. So that kind of deals with, if you're going to run into any issues with disturbance, if it's the dry season, any impact should be absolutely minimized
Mm-hmm.
then. But also and this is something else that we're working on with permitters. There's got to be ongoing monitoring of water quality after the cleanup, so to speak. And there's a bunch of details, of course. We're going to be thinking about insulating contact points because once we remove all the waste, of course, the contact points of mineralization remain. There's going to be exposed veins of copper and VMS here and there. So yeah, you want to be trying to find a way to insulate those using clay and whatever else gets recommended by O'Kane, which is the group that's actually doing our reclamation
Yeah.
work. And I could go on, but at the end of the day, it is a very important consideration, and it's something that we're dealing with the permitters right now. Believe me, this group has absolutely no interest in doing more damage up there. That would absolutely be defeating the entire purpose of this project. So rest assured, all of this stuff will be carefully considered and mitigated.
Are you going to have to pose some kind of an environmental bond? I know it is you don't know for sure yet, but what are the probabilities of you having to pose some kind of a unattainable environmental bond that's just too expensive to post?
Yeah, well, I expect that there will be some obligations there, and as I mentioned earlier, the reclamation of the site is certainly kind of linked to the permit.
Mm-hmm.
So, having said that, again, if you want junior mining companies to be tackling some of these high liability legacy mine sites, I think you've got to be reasonable in terms of what liabilities get passed on. Otherwise, nobody's going to tackle the legacy mine sites and they'll stay as they are, which is also not acceptable. So we've had again good discussions with the permitters. Our understanding is that their position is going to be, hey, if you touch it, you're taking responsibility for it. So that's probably a pretty reasonable compromise.
Yeah.
I don't think we're taking on the liabilities of the past. I don't think that would be reasonable, but we are taking on liabilities for anything that we actively disturb up there.
Mm-hmm. What about
Which
local?
again, I think is fair.
What about local community? I think it's fair as well. But what about local communities? What's the situation with any kind of township or whatever might be close by to it, as well as traditional ground like First Nations land?
Yeah, so we have presented to North Couch and City Council, and they're very much in favor. Again, it's not hard to see why. They see a big potential liability for local citizens there, and they'd love to see it addressed, both from a kind of physical danger and an environmental standpoint. Their only caveat to us was that First Nations also be supportive and informed, of course. And we've been doing that. There's at least two local First Nations groups that are impacted. We've been keeping those groups up to speed with everything we've done up there. We did a presentation to the elders at one of the First Nations groups, and we've done tours for representatives from both groups of the site. So we've been working hard to make sure everybody is informed, and we're actually in the stage right now of trying to put an MOU together that would essentially give all the First Nations groups affected a say in how we go about this, and more importantly, what it looks like when we're done the reclamation phase.
So you're going to need like a formal consultation agreement or like a revenue sharing arrangement or something like that? Or what are your expectations for what's going to have to be put on paper?
It's probably going to be both, and I don't want to comment too much because we were just early days of talking about it, but absolutely, I would love to see local First Nations benefiting at the end of the day from this, as they should. And but also, and I actually think more importantly, at the end of the day, just to have input, to be fully informed and have the ability to say yay or nay or why to these different aspects of what we're doing up there.
Mm-hmm. So that's essentially the most crucial part of the puzzle is your permitting plus First Nations combo and how that's going to work together. That's, I suppose, also the most unpredictable part. What's the deadline on a definitive answer there? Like if you want to be in production by, would you say spring 2027? That's about a year from now, or call it a year and maybe a quarter. When are you going to have, a definitive answer on the permitting and First Nation situation?
Well, I'm trying to move things along as quickly as I can, but you have to be patient when it comes to these things. I think the kind of North American and probably European way is to plow forward and get agreements done quickly and have everything be certain and predictable. And that's not necessarily the way it's going to work with First Nations groups. A lot of it is going to be based on trust and they want to move at their own speed. Want to make sure the whole community is well informed and behind it. They're not necessarily rushing into things. And so there are some cultural differences in approach here that just need to be understood and recognized. And so, um, uh, having said that, I'm pushing, but I also have not been overly aggressive just in recognition of that fact. Um,
Yeah.
you're quite right. And, 2027 is going to come quickly, and at some point the rubber will hit the road. But I'll highlight that we have been keeping everybody up to speed as we go. So it's not like we're going to go in there and say, hey, we need to have a deal, a comprehensive deal, and we need to review all this and you've got 3 days to do it.
Hmm.
Uh, they've seen our engineering reports, they've seen our reclamation plans, and as I said, we've delivered presentations, etc. So it's not like we're starting from zero. I think everybody's pretty well informed right now. It's there are just a few details I think we need to work out, and really the reclamation part is probably the bulk of the work because the reclamation component is going to require input from everybody.
Mm-hmm. Yeah. And again, continued updates, I suppose, is what's going to happen. And maybe I can follow along with that story. Let's assume that it goes well. What happens after that? Like you scoop it up, you truck it to the port, I assume, and then onto a boat. Or what's kind of the assumed supply chain looking like here? What port are we talking about? How does it get there?
Yeah, there's a number of options that we have. Luckily, there's a port at Crofton, which is about 15K away from the mine site. Cowichan Bay has another port. Malahat has one. There's one in Nanaimo. We love the idea of using Crofton just because it's very close, and as luck would have it, it's not really in use. There's a couple of companies that use it, but it was privately owned by a paper company that essentially shut down a couple of years ago. So it's a pretty interesting set of circumstances for us. So that's what we're looking at right now. But we have options at the end of the day, which is nice.
Mm-hmm.
And then so we would be selling it to essentially to the end buyer. And as we discussed earlier, we haven't narrowed that down yet, but we have lots of interesting leads. It would most likely be an end buyer overseas, which is why the port is such an important part of the equation here. And again, we'll get into the details when we get there, but if it whether it's going to be FOB or not, we'll figure out those details when we get there.
Is topography a decision point as well? Like, is one of the ports more easily accessible and using less fuel to get to essentially?
Yeah, that's right. Crofton is certainly the closest and requires the least amount of trucking and fuel. I'll mention that the Alberni claims that we just picked up that have what we think again tremendous waste rock potential. Uh, One of the reasons we are excited about it is because it's 15 minutes or so drive from the Alberni deepwater port.
Mhm.
So that's just kind of going back to what we discussed earlier on. Uh, I think early on, especially, these waste rock opportunities are going to be slightly dictated by proximity to port, if that makes
Mhm.
sense.
But this is up in the mountains, right? That we're talking about, and you essentially have to drive down to port.
Yeah, so Mount Sicker, a bit of a misnomer. It's not Whistler. It's 800 meters elevation. It's just a fairly dramatic change in topography relative to Duncan, but it's not a ski hill for sure.
What about how you're going to get there? Because I think there's like a forestry road that you use for the last couple of kilometers to actually get to the site where the waste pile is. What kind of infrastructure would you have to build to have it operational and having big trucks driving back and forth all day long?
One of the best things about tackling these legacy mine site opportunities is that there's old mining roads leading right to the waste pile almost every time. Mount Sicker is no exception. There we will almost certainly have to make some improvements to the road, and we've actually gone out and gotten estimates for time and money to do that. But as I said, the good news is the roads go right to the pile at this stage. They just really need to be improved and potentially widened in a few spots.
Yeah. Yeah, because that's the thing that I would have followed up with is like, sure, but mining in 1895 was done with different equipment, of course, and it's also been a while, so the roads probably been eroded partly as well.
Yeah.
And again, this is the type of stuff that we would typically talk about in a or after PEA. Which you're saying you wouldn't have. When do you?
By the way, I want to forgive me for interrupting you, but uh, the other reason you're not necessarily going to see a PEA for these projects, I mean, of course, the brevity. We're talking about a year or much less in many cases to get through these piles, but the capital costs, something I really want to mention, they're minuscule.
Mhm.
The crusher and the sorter that we're going to need uh, to uh, to get this waste operation started, we're talking less than 1 million, kind of all in, including uh, front end loaders, et cetera. Like to get to cash flow, the actual investment we're going to need to make in hard dollars is very, very small compared to any kind of traditional mining operation that you can think of. And
Mhm.
that's what makes, I think, these waste rock projects truly unique and very unlike traditional mining is the actual costs, especially with what we're doing with, essentially just the crushing and sorting and not taking it further to flotation and beyond. Uh, the investment required is very small, and the speed is increased dramatically.
Mhm. And that is essentially where I was going with this is wondering about CAPEX and how much that's going to cost you and when you might present that number to the market. Um, are you gonna? I mean, are you gonna talk to the market about how much is it gonna cost, or are you maybe in a while you're raising capital, or yeah, how and when do you think you might have that final number and talk to the market about it?
Really interesting that you mentioned this earlier about once we get our permitting in place, we will have to make some big decisions about what we do, including whether or not we stay public, which is an interesting point for you to bring up. So, yeah, that's going to be among one of the big decision points that we need to make. Are we going to be this very big oddity in that we're going to report cash flow really before we've reported much of anything else. And I guess it's more of an interesting regulator question in a way because short of filing a PEA, we're not really supposed to talk about numbers, as you know.
Yeah.
So it brings us to a bit of a conundrum. Like we may find ourselves in a position where we're sorting waste rock and delivering high grade waste rock to port and getting paid for it, and that being our first substantive announcement where there's a dollar value
Hmm.
attached, um, which of course would be strange and a bit of an oddity, but still uh, just following the regs, so to speak. So the other side of that equation is, of course, we could go out and we could try and whip up a PEA of sorts or an abbreviated PEA and just uh, get it out there for people to absorb, and that may be another route we take, but we'll have options, you know.
Well, and that's what I'm wondering. Like, come time for you to raise money, which I assume you're going to have to. Are you going to be allowed? And how is that going to work even in the first place if you don't have a PE? Like, what would you be pitching? How are you doing from a money perspective? That might be worth updating on as well. I think you just raised some money not too long ago. How much money do you have right now?
We have about $700,000 in cash. I know that doesn't sound like a lot for a mining company, but as I said, we've been running so lean and mean for the last 3 years that it's a lot for us. And we don't have a lot of costs other than, of course, all of these permitting requirements. And so our costs are reclamation studies, our costs are engineering related, but they're not substantial because what we're doing is not particularly complicated. So we're in a good spot. I think that we will get to permitting, a hopefully positive permitting result, uh, absolutely with the cash that we have and then some. And then at that point, we'll make a decision about whether or not we want to think about using debt,
Hmm.
for example. I'll also mention that because what we're doing up there benefits the environment, we do have access to some grants and other funding sources. So that's something else that we're actively exploring right now.
Yeah.
So there's kind of a myriad, pardon the pun, a myriad of options on the financing front. Equity being just one of those. It, in my opinion, in a perfect world, what I'd love to do is get to operations without raising another cent through equity.
Huh. And again, then we go into the discussion of debt and potentially going private as well, which is another one we could have at a future date once you know more. What about just running the company? Because you said you want to do more marketing. You might need more people or not. Do you feel like you have enough people? Or are you going to be hiring new people? And what is marketing as well as hiring going to do to your G&A?
So marketing has been going great, and as I said, we've just started. So we're not spending a particularly large amount of money on it. We're going to see how it goes for the next couple of months. Um, I like marketing, don't get me wrong, but I really want to focus on getting the permit and getting back to work. So if at the end of 3 months, if we don't think we're getting really good return for the shareholders for the marketing spend, we'll probably just put our heads down and go right back to work, getting the permits in place.
Mhm.
So in terms of hiring, I tell you, this is kind of an exciting thing that I've discovered is uh, Vancouver Island has a lot of miners, a lot of ex-miners, for obvious reasons. There's lots of mineralization here, so I get calls almost every day, if not once every 2 days, from somebody who was in the mining industry and would love to help out at Mount Sicker, and which is great. The public response has been very cool, and so I suspect we'll have no problem filling our labor requirements once operations start. There seems to be lots of people interested in getting involved, and it's not a big operation. At the end of the day, we're talking about 10 to 20 full-time employees, 50% of them truckers
Mhm.
over the 1 year, and then of course on to the next one, on to Bluegrouse, and on to Alberni, and on to Santana, and so on.
Mm. Well, so how much do you think you're going to have to spend on G&A again, marketing, running the company, potential new hires, whatever else you might need between now and getting into production before cash flowing? How much is non-operational work going to cost you?
I think the burn rate that we have right now is the burn rate that will apply right up until operations start.
Mm.
the permitting stuff, don't get me wrong, it's difficult and there's a lot to it, but we're dealing with it all essentially in-house, outside of what is necessary to contract. So, for example, O'Kane, which is a wonderful group based in Saskatchewan, they are doing our reclamation plans and studies, and they've been great. They're one of the contractors that we pay kind of independently.
Hmm.
Andy, as I mentioned, is a massive resource for us, and essentially is kind of working for equity. He participated in the last private placement. He gets options, and he's just very happy to help because I think he really likes the project and the idea of the project.
Yeah. What's that burn rate again? I think you mentioned it earlier.
If So if I was to take kind of all of our regular salaries, which is not all that much, and add marketing, right now our burn rate's probably in the 30,000 a month range,
Huh.
or less.
Okay, that is not a lot.
That's high for us, by the way. It's been 10,000 a month up until recently.
Hmm.
So we've added a couple new hands, but we're not going to have to go beyond that. And if anything, that'll contract.
Is cost part of the reason why you're in the CSE and not the TSXV? Because I think you guys as a group kind of prefer the CSE. I know there's people who are skeptical of it. So what's your take on it? Why the CSE versus the TSXV?
I wish I could give you a deep analysis reason for my answer, but I had done TSXV companies up until 3, 4 years ago, and decided I would try the CSE out. Obviously there's some flexibility built into the CSE, and they can be more reasonable on costs as well. So I really did just think, hey, let's try and list on the CSE and see how it goes. Very happy with the result, by the way. But I had never actually tried the CSE before, and so that was kind of part of the reason for going this way.
Right. But it is cheaper though than the TSXV, or is it not? I feel like that's something I've heard before.
Yeah, it is cheaper. I mean, at the end of the day, it's I don't think it's materially cheaper, but it's I think the thing that people like about the CSC is the flexibility. There's some of the regulations are a little, I don't want to use the word looser, but you've got more room to maneuver as a company in terms of acquisitions and also builder shares, and there's a few other I think notable differences. Which of course we could get into if you want, but there's of course pros and cons. I think the TSX venture, for whether they deserve it or not, I won't even speculate, but I think internationally a more recognized firm, or sorry, exchange. Would you agree with that? Or you actually might be a good one to ask.
Well, up until recently, a lot of people couldn't trade on the CSE with a discount broker like Interactive Brokers or something. I think that's been fixed. Um, I didn't have that issue or haven't had that issue for a couple of years, so it hasn't been a problem for me. But I think there is that the CSE is a newer exchange as well, and so there's always kind of that belief, I suppose. But yeah, I always thought it's about costs, really,
Okay,
and flexibility, like you mentioned. I think they call themselves the entrepreneurial exchange or something along those lines,
sure.
um,
Yeah,
which in terms of flexibility would make sense to me. So
yeah.
interesting topic, though.
Yeah, it is. I mean, we could have a whole segment or show
Yeah.
just talking about the TSXV versus CSE for
Hmm.
sure.
Are you going to keep expanding the land position? Because I wanted to ask you why keep expanding and why do you need five projects for when you haven't kind of proven one? I mean, why not prove up the one and then see how that goes, pick up new projects in the back of that? But you're kind of already moving, though slower, but you're moving on multiple fronts at the same time. Is that something you're going to keep doing? And also why?
Really good question. And by the way, we get feedback on this on both extremes. So we've had people say, "Hey, just focus on Sicker, get through it." And I've got other shareholders that say, "Why are you not expanding faster and adding more waste rock projects to the pipeline?" So we're kind of hitting what I think is a happy medium here. With Mount Sicker, we did a lot of work over a couple of years evaluating the site and satisfying ourselves that it was de-risked. And now that we're in the permitting phase, there is a little bit of hurry up and wait going on. So, to keep the feet moving, it only makes sense to be out there looking for the next project. And we talked about this earlier about Justin, and of course being an insider, et cetera. But one of the great things about having Justin on our team is that he's given us tremendous flow of potential pipeline, like really good stuff. And as I mentioned earlier, we're not paying a lot of money for these. In fact, it's mostly equity to Justin for adding these pipeline projects. So it's been relatively painless, with the exception of some minimal dilution at the end of the day. But we've been able to secure at least a little bit of a pipeline, and there's a reason that the pipeline actually is important, and that's if the penny drops here and the world starts to get really excited about reclaiming legacy mine sites, they are going to go fast. If we get this permit and we can actually demonstrate that there's some real economics here, there's going to be a rush to the pump, I think. So we'll be glad at that stage that we've actually locked up a few projects. And as I said, once we've locked them up, it's pretty cheap and easy for us to start evaluating these things. We're taking waste rock samples on a grid. We're doing some auger holes and testing the piles deeper. We've been doing that, by the way. You can see in our old press releases, Bluegrass. We did 100 grid samples there. We've done samples across the waste piles at Santana. Right now, in fact, as we speak, Justin is sampling waste rock at the Alberni claims. So we're learning about the potential for all of these waste rock projects kind of as we're in permitting with Sicker, which I think makes perfect sense.
Yeah. Yeah, it does. Yeah. And again, it's something you can talk about in future conversations as well, hopefully, as things develop. But it's a strategy decision, and it's a capital allocation and a time allocation decision as well. So,
Yes. Yeah, great.
yeah. Yeah. Well, again, we've been at it for a while now, Pete. I'm interested in how the model works. So I could keep annoying you with questions for probably another hour, but I know you have real work to do. So I'll start working toward wrapping it up here. What am I forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
I think we've covered it all, and I appreciate your time, Antonio. I really do. I would welcome the opportunity to chat more anytime. So if a few questions occur to you and you'd like to ask them, perhaps I could bring Andy on, and he could answer some of them, so you could hear some more technical answers right from the horse's mouth, so to speak.
Sure.
That might be something we could think about.
Yeah, it is. It could be. It could be an interesting conversation. I'm open for it. What's the most fair criticism that you've received from investors since you started, going for this strategy here?
I think the permitting process just being a fairly long and arduous process, and it's not the permitter's fault. It's something I just want to highlight. This is us just feeling our way through this, and it is a kind of a novel and unlaid path, so to speak. So that's been kind of the point of impatience, I would say, if anything. But once we get through it, once we've established a permitting pathway that everyone likes and is satisfied with, it's going to go faster, of course. And like I said, I think once we can prove this concept, and Mount Sicker is a great test case. If we can prove that there's great economics here and that we can make a real positive difference on the environmental side, I really do think you're going to see a lot of excitement in this space, especially when you consider the 2,000 legacy mine sites in BC and probably tens of thousands in the world and beyond.
Hmm. Again, something that I hope I can follow along with. It is an interesting strategy, and it's going to be interesting to see how it develops. And I'm sure I'm forgetting to ask you stuff or to push back here and there, but I'm hoping you'll be back on again sometime. So for people listening, let me know what I'm forgetting, and I will ask it in a future conversation. Other than that, Pete, that's about it. Thank you so much for stopping by today.
Thanks, Antonio. I really appreciate your time.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they are necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing, and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks, or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."